Hello and welcome to China Shortcuts.
The European Chamber's weekly catch-up on China's business landscape.
This episode was recorded on 10th September 2025. Data released by China's Customs Authority on 8th September showed that the country's total export value increased at the slowest pace in half a year in August, with import growth also softening from the previous month.
The total value of exports was up 4.4% year-on-year, with the rate of growth narrowing significantly from July, when exports surged more than 7%. This sharp uptick was largely attributed to export front-loading in July, as a 90-day suspension of US tariffs on Chinese imports was due to expire in August. The tariff suspension was subsequently extended. Concerns over mutual tariffs being reimposed also had an impact on imports, with companies reliant on imports from the US stockpiling goods in July. This then led to a subsequent slowdown in overall import growth in August, with the rate of year-on-year increase narrowing to 1.3% from 4.1% in July.
Producer price deflation continued for the 35th month in a row, while consumer prices sank at the fastest rate recorded in half a year, according to data published by China's Statistics Bureau on 10th September.
The official producer price index showed a 2.9% drop year-on-year. While still significant, this was the slowest pace of decline recorded in 4 months. The Statistics Bureau highlighted 4 key factors behind the slowing decrease. First, a relatively low base from the same period last year. Second, efforts to control disorderly competition at low prices. Third, a recovery in prices in emerging industries. And finally, an uptick in consumer demand for certain health and leisure-related products, pushing their manufacturing prices up. Meanwhile, consumer prices dropped 0.4% year-on-year, decreasing for the first time in 3 months, as food prices dropped sharply from the same period last year.
On 8th September, China's Ministry of Commerce, the National Bureau of Statistics, and the State Administration of Foreign Exchange jointly released the 2024 Statistical Bulletin on China's outbound direct investment, which showed that China increased its global share in direct investments, ranking among the top 3 investors in the world for 13 consecutive years.
China's outbound direct investments totaled $192 billion in 2024, increasing 8.4% from the previous year. This means China accounted for 11.9% of all global investment flows, up 0.5% from 2023. Nearly 80% of China's outbound direct investments was channeled into Asia. Investments flows into the EU totaled $5.9 billion, up 9.3% year-on-year, and accounting for just over 3% of China's total outbound investments. Over 70% of EU-bound investments were directed into the financial sector. China's investments into the US surpassed the amount invested in the EU despite dropping more than 4% year-on-year to $6.6 billion. However, looking at investment stocks, those in the EU totaled more than $116 billion by the end of the last year, accounting for 3.7% of China's external investment stocks. Meanwhile, standing at nearly $90 billion, China's total investment stocks in the US contribute 2.9% of the country's global total.
Each year, the European Chamber releases its position paper with recommendations to Chinese policymakers compiled by its membership organized into working groups, sub-working groups, industry desks, and forums. The paper sets the Chamber's advocacy agenda for the year ahead.
With China now in the preparatory phase of the 15th Five-Year Plan, this year's executive position paper reviews China's 14th Five-Year Plan, assessing both the positive and the not-so-positive outcomes, and suggests areas that the 15th Five-Year Plan could focus on, so that the guiding principles for the next 5 years can be fine-tuned in a way that enables a more open and mutually beneficial EU-China trade and investment relationship.
Join us on 17th September to hear about the key challenges faced both by businesses and China's economy more broadly, and the steps that could be taken to overcome them. Following the launch, the position paper will be available to download for free from the Chamber's website.
Thanks for listening, and don't forget to tune in again next week.
In the meantime, please find the useful links in the episode notes.